Debt can be a really powerful tool in wealth building, yet it's often feared because it represents a liability. So you've got to recognize the difference between good and bad debt.
Wealth HQ, empowering you to take charge of your financial life.
Financial freedom. Financial freedom.
As we continue our journey in building a millionaire mindset, it's essential to understand that wealth creation isn't only about numbers and strategies, it's about the mindset, emotions, and psychological resilience that allows you to keep pushing forward, especially when things get tough. Obstacles will always be in the way. A successful wealth building journey requires facing financial fears head on and developing the mental tools to stay steady, confident, and goal-focused through life's inevitable twists and turns. Everyone experiences financial fears, whether it's the fear of losing hard-earned savings or the uncertainty of stepping into new investment territory. These fears are completely normal, and they're even useful. They're part of our protective instincts. However, left unchecked, financial fears can lead to inaction, which ultimately stops you from achieving the financial freedom that you deserve. So let's address 3 of the most common fears and look at ways to manage them while building our wealth. So the first one is the fear of not earning enough money. This fear often stems from concerns about job stability, limited income growth, or the worries about the cost of living. While income is a fundamental component of wealth, remember that earning more isn't always the only answer. Instead, focus on building skills that increase the value in the marketplace, and seeking income diversification through side projects or investments, and carefully planning your finances. By mapping out a financial plan and setting realistic savings and investment goals, you can commit to this skill development and conquer this fear, gaining control over your income potential. Now, the second fear is the fear of losing money. One of the biggest fears in wealth building is losing money in investments or business ventures. And many people, they become overly conservative, holding back on promising opportunities because of this fear. The antidote is education and diversification. By learning more about different asset classes, whether it's stocks or real estate or businesses, and spreading your investments, you reduce the risk of significant loss. Remember, every investment has a degree of reward and risk, but with the right strategies and a well-rounded portfolio, you can mitigate this fear and gain confidence. You can see our life model from the previous video to learn more about protecting yourself. Now, the third fear is the fear of debt. Debt can be a really powerful tool in wealth building, yet it's often feared because it represents a liability. So you've got to recognize the difference between good and bad debt. Good debt is like a mortgage debt on an investment property, and it can generate income and build equity over time. The unproductive or bad debt, on the other hand, it drains your resources. Personal loans, car loans, hire purchases, your unpaid credit cards, these things can weigh you down. When considering debt, align it with a clear goal and a manageable repayment plan. Using intelligent debt to buy income-producing assets is the key strategy for building wealth. And without this leverage, your journey to financial freedom, it's just going to take a lot longer. Recognizing your own biases and developing mental resilience is crucial to becoming a successful investor. The key psychological factors, the first one is the cognitive biases that prevent you from harnessing the millionaire mindset. We're looking to use cognitive biases as shortcuts that we all use, but they can lead to poor financial choices. For example, confirmation bias. It leads us to seek information that validates our beliefs. If you believe a certain stock will perform well, you might ignore the warning signs, leading to overconfidence. So to counter this, you should actively seek out alternative perspectives and document your decision making. That's not a fun part, but it's a key part. This approach can lead to more well-rounded, informed choices and help you stay objective. Another common bias is loss aversion. This is where the pain of losing money is felt more intensely than the joy of gains. This bias can make you overly cautious, causing you to hold on to investments that aren't serving you well, or you lead yourself down a pathway of avoiding lucrative opportunities. Embrace the risk as part of the journey and focus on long-term goals. This will help you counter loss aversion and develop awareness of these biases. In the world of finance, it's easy to follow the crowd. This is known as a herd mentality. When everyone else is investing in a certain trend, it's easy. There's a strong temptation to just jump in. However, successful wealth builders stand apart from the crowd. They are what's called contrarians. Developing independence in your financial decisions is the key part. Prioritize thorough research and analysis rather than simply following popular trends. Working with trusted advisors can help you make objective decisions that align with your long-term goals. Now, this is one of my favorites. Overcoming the sunk cost fallacy. This bias traps people into holding on to investments or staying in financial decisions that simply because of the time or the money already invested. It's like sticking with a bad investment just to avoid wasting your initial investment, be that the time or the money. This approach often results in further losses. It's what's known as putting good money after bad. To avoid this trap, periodically assess your portfolio and make decisions based on future potential rather than past costs. We do this a lot at Mortgage HQ, helping people assess their returns in their portfolios compared to the alternatives. By letting go of non-performing assets, you free up resources to pursue better opportunities. Now, this is the platinum level elite thinking, and it revolves around embracing self-reflection and continuous learning. A true millionaire mindset is grounded in humility. The self-attribution bias is where people attribute success to their skill and the failure to bad luck. This can lead to overconfidence and missed learning opportunities. Think Dunning-Kruger. Now, we want to embrace both successes and failures as valuable lessons. We want to keep learning, whether from your own experiences or from others, and be willing to adjust your strategy as you gain new insights. Remember, wealth building is a lifelong journey, and every setback is an opportunity for growth. And wealth building isn't about eliminating fear, it's about managing it constructively. Fears, when they're acknowledged and understood, can actually fuel your progress.
The only thing we have to fear is fear itself.
The key is to harness fear as a motivator rather than as a deterrent. To keep your mindset on track, consider creating a visual reminder of your why, like a family photo, or a vision board, or a why wall that reinforces your goals. When doubts arise, these reminders will help you refocus on what truly matters and why you started this journey. Finally, wealth building requires discipline and patience. Set milestone goals that align with your broader vision and celebrate each small achievement along the way. Whether it's doubling your savings rate, securing your investment properties, or hitting a new net worth milestone, these incremental victories sustain your motivation. A millionaire mindset is not just about reaching the finish line. It's about enjoying the journey, growing through each step, and building a legacy of resilience, knowledge, and fulfillment.
Wealth HQ, empowering you to take charge of your financial life.